Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 8th day of August. 2019, and it's a great day. I can't tell you why, but trust me, it's a great day for all of us. Yeah, you too. I still can't tell you, but anyway, God's good. Welcome to the show. So glad to have you with us today. Now, I don't have a chart up yet of the S&P 500 Emini Futures. I'm going to pull one up in a moment. I was getting my charts together. Michael needs to come on first because he has an appointment, and now he's having difficulty logging in. So, let me do my standard patter, and we'll shuffle along. If you can't see the image I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, and you still want to join the show, go to youtube.com/CFRN/live, and there you will find a live, real-time simulcast of the show as it unfolds. Brought to you by the good folks at YouTube. Thanks, YouTube. All right. So here we are. All right, I just got another message from Michael. What does it say? Reboot your computer, Michael. All right. Tell you what we can do. We can look at... I'm just waiting for another message from him to see what's going on, if he's going to make it or not. All right, we can take a look though, and we should because we haven't for a while. Hey, stand by, guys. Yeah, I just sent another message to my compadre, Michael. I got a little bit of news. I'll give you that too. All right. But first, let's take a look at the S&P cash index. SPX. Some of you know what the S&P 500 index is, and maybe some don't. So let me just give you it real quick in case you don't know. The S&P 500 originally was an index of 500 large cap companies that met a very lengthy list of criteria. Now, if one of those 500 companies ever becomes unhealthy, maybe they miss their numbers a few times, the panel over at the S&P 500 Standard & Poor's, well, Standard & Poor's, the 500 part is the index, they will hold a meeting. They will vote to boot the weak one from the herd, and they will induct a new, strong, large cap bull to take their place. Because of this dynamic, the S&P 500 and the other indexes as well will always rise over time. Bring up a chart. In fact, I'll show you. I'm going to switch this out to monthly. Okay, now I'm only going back to 2012 right here, but we can definitely say that's an uptrend, right? Let's scrunch it up. It's a technical term, scrunch. Okay, we're back to 1988. Now we're back to 1972. Now we're back to 1958, 1941. 1885. All right. I can only go back as far as 1872. But I think you'll agree that over time, from 1872 until 2019, we've been in an uptrend. Have there been some sell-offs? Some retracements, some pullbacks along the way? This is a monthly chart. Yes, yes, and yes. But because of the best of breed characteristic of the index, the weak ones get booted, fresh, strong bulls are brought in. If you could only trade in one direction, you want to pick long, because this is what happens over time. Okay? I think that dynamic's important to understand. Now, the S&P 500 index was simply to provide a benchmark of sorts to investors as to the, health of the market, what's going on. But you couldn't trade the index. So man, being clever as he is, created derivatives so that other men could trade this index. Now, the derivative that we trade, of course, is called the Emini Futures. With me? Okay. You can't trade this. This is what you'll hear referred to as the cash market. Now, let me go back to daily. This does not, once Wall Street closes at 4 p.m. Eastern, this cash index does not update again until the Wall Street open following morning, 9:30 a.m. Eastern. Let me take us intraday so you can see what I mean. All right. 30-minute chart. These gaps. You with me? We don't see that in futures, except usually on Sunday night. We see it in earnings season sometime. On Sunday night, we often have a gap because the market's been closed for a day and a half. Well, this is what happens when a market closes overnight. Closes here in the afternoon, opens here the next morning. Now, futures follow the cash index, not the other way around. And that's important to understand also. We really should take our bigger picture cues from the cash index, because again, futures follow this, not the other way around. The derivative futures was created so that we could trade this thing. Okay? All right. So we had a gap higher open this morning, and we haven't printed a red candle yet. We've also run into some resistance. And let me check on Michael and see what's going on. Okay, he's still working on it. On a 30-minute chart, you see this gap lower open here? Okay, that's now closed. All of these gaps are closed. Now that thing that we hold near and dear as a market truth, that gaps on the index futures almost always closes, does not necessarily hold true for the index itself, or stocks, or crude, or gold. Okay? The reason I don't show this chart daily, the reason I don't plot everything on this daily cash index chart, is because I'm still in the progress of getting our indicators to run on this platform. And the platform that we use, the brokerage that we use, Daniel's Trading, they are a futures trading company, so they don't have this cash index chart. Okay, real quick, let's just take a peek at gold. It's 30-minute. Let's look at daily. All right, there we go, daily. Looking good. We traded above 1500 yesterday, did we not? 1500.34. Now, in things like not so much the S&P 500 E-mini, although some people will argue that it does, but I don't think so. It's just my opinion. But big round numbers like $1,500, those do carry some weight in gold, in crude, soybeans, ag products, and lots of others. Let's see what silver's doing today. Somebody I know was very happy when I told them what happened to silver yesterday, and they were pulling back today. We're at 1692. Man, if we could hold here and start to power higher, that would be good. Silver can get back over $20, then I really think we could see 50 again. It's happened twice in history. Silver. Let me get a different silver. Silver US dollar. No, that's not it. I don't see the one I wanted right here. That's not going to work. I don't think this one will either, but let me just take a peek. Yeah, see this doesn't go back far enough. I'll find a good one to show you. Okay. I don't know if Michael's going to make it or not, so.
Oh, I'm here.
Oh, you are? Very good. All right.
Yeah.
See, when you said you want to go first, I said, okay, I'll just get my chart situated while he's doing that. And
Yeah.
why don't you just
Sorry,
grab it
man.
and go, guys? When I come back, I'll give you the cash number, the markets, the numbers from around the world as I do each day. But go ahead, Mike, just take it away.
Okay. All right. Yeah, I did have to reboot.
Okay.
Sadly.
Well, good. I'm just glad you got in.
Yeah, me too. Me too. Now I couldn't get the spreadsheet to update properly, so I'll update it when I get back home today.
Okay. Now, guys, Michael's
but I'll
volume is off today, so turn up your volume knob or just lean in close because he's got an issue with his microphone. He's working off his laptop.
Yeah, I'm working off the laptop in a hotel room. But I hope to be done after today and not have to do it again for another 2 weeks.
Okay.
And all right, so I'll just go through what happened. I'm not going to bring up the spreadsheet because I couldn't get it to update properly this morning.
Okay.
But I will update it when I get home tonight.
Okay.
But today it took 23 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. We took 3 trades on crude oil. The first one was for 10 ticks. The second one was 1 tick. And the third one was 11 ticks. So we ended up plus 22 on crude. We took 5 trades on gold. Only one of them was profitable. The other 4 were all break even. And we ended up with 5 ticks on gold. On the euro, we took 3 trades. 2 of those were break even, and 1 of them stopped out. So on the morning session, we were plus $220 a contract. Now, I'll go through it all here right now. That's the 6th. That is the wrong day. Today is the 8th, right? Yeah. See, all the lighting and everything in here is just off. And there we go. This is today. Okay, so that was all pre-market stuff that happened right there. On the gold, let's see. 9:45, it opened up. We had a break-even trade there. We missed that one right there. That would have probably been a break-even trade if we'd have gotten it. And we missed that one, which would have been profitable. We got this one, which was a break-even. We got that one, which was another break-even. This is where we picked up the 5 ticks right here. And then on this one right here, it would have been a momentum long trade we missed. That would have probably been a break-even trade. Now, let me back this out a little bit and go through what happened during the break. Yeah, during the break, it looks like there was a shorting opportunity right here off the BBC that would have given some profit. And that was pretty much it for the gold. All right. Now, on the euro, let's see, what do we do on the euro? We had a break-even trade there. We missed a long there that would have been profitable. We had a break-even trade there. I'm trying to scroll back right now. You know what? Why don't I back it out? See, I'm using my portable monitor right now, so things might be a little different. We had a break-even trade there, and we stopped out on this one. Okay, I don't know what happened right here with the euro, but the euro and I think gold started to run, and then they gave it all back. It's strange this morning on the euro. I mean, crude oil, my favorite market. Once again, let me just back that out, and I can talk to you about it. Come on, I'm scrolling. is just not cooperating. Hold on a second. Oh wow, that's way too far. And I thought I deleted all that stuff. All right. Well, anyway, what I'm trying to show you is that I took 3 trades on crude. The first one was plus 10. That was our first trade of the morning. The next one was plus 1 tick, put us at plus 11. And the one after that was plus 11 ticks to put us at plus 22 on the morning. That's what I'm trying to show you. But right now, obviously, you can see I am having an issue with my charting platform. Yeah, and that's it. Okay. So I can't show you the spreadsheet right now, but I think we're up. I thought yesterday we were up $1,596. So today we would be up 1,600, 1,700, 1,816 bucks, something like that. Okay, but I'll update you in the spreadsheet tomorrow. All right. Now, Valerie, are you in here?
Yes, I am.
Do you remember what I said that level was? 53 something.
53, 55.
53, 55. Okay. Did we get there? Yeah. I don't know. Let me look at a bigger time frame. Oh, we got up to 53 even. Or just about 53 even. Okay. Well, we're hitting the BBC right now. Right now. And this next leg up on crude should get us up there to where I suggested that crude should go. All right. Okay. Well, with that, I guess I can just pass it back out. Studio A in fabulous Phoenix, Arizona, in South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah. Ready.
Okay.
Ready. Okay, get a little chart action. All right, and the recap of the recap was?
Today it took 23 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 per contract.
Okay. So is it your computer that's having the audio problem, or is it your headset, or?
You know, I think it's the jack on the laptop. I think if I swapped it around with one of the other ones,
Yeah.
One of them's a high-speed jack, and I think that's probably the issue.
Huh.
But right now I'm talking through the headset again. Where earlier this morning, I was talking through the computer, just through the laptop, and they said it was better through the laptop than it is right now through my headset. But I mean, and this is the headset I use every day, so
It must be the jack, because you're still very, very low, but it's cool. You'll be home tomorrow. It'll be fun.
Yeah, I'm
Okay.
home tonight.
All right, and tonight,
Yep.
yeah. All right.
Yep.
All right. Well, I know you got to run, so I'll take it from here.
Okay.
John's
Thanks.
not in here yet, is he? I haven't talked to him.
Hang on, let me check.
I don't think so.
I gotta move this over to scroll up on that.
No, he's not here yet.
Okay. All right. All right, Michael. Talk to you tonight.
Okay. Yep. We'll talk to you tonight.
All right, here we go, guys. Cash markets around the world, starting here in the U.S. The Dow currently up 295 points. That's a little over 1%. NASDAQ up 142 points. That's almost 2%. S&P 500 up 44 points, 1.5%. And the Russell 2000 up 27 points, almost 2%. In the commodity basket, crude oil up $1.44, trading 52.53 last. That's a gain of almost 3%. Gold taking a breather, down $11.40, trading 15.0820 last. Now, keep in mind, a healthy market, a healthy bull market, will always have pullbacks. It will always have retracements. We refer to it as rest. The market takes a rest, a breather, if you will. Now, I'm going to walk you through the Concierge Trade Alerts from last night. And we'll take a look at logic. I don't know if Valerie's had a chance yet to recap the logic alerts. She had an electricity problem this morning, and so she may not have had a chance yet. So we'll focus on the Concierge. Now, let's go back to Sunday night for just a minute. That's when our week starts. Sunday night, 6 p.m. Eastern, at the Globex Open. We start analyzing, churning data, and we don't stop, really, until Friday afternoon, 5 p.m. Eastern. Logic 247. Around the clock for a number of reasons, and part of that being that we do have clients around the world. So when most folks here in the U.S. are sleeping, we have traders that are wide-eyed and bushy-tailed, and they want to go to work. So we accommodate. Now, off that Globex Open, we had an alert, to be short, 29.25, Concierge Trade Alert. We dropped 24 points off that initial entry. We printed an exit signal at 29.01. So any of our traders who took this entry, now they could have gotten out anywhere along the way that they wanted to. But once this thing dropped more than 5 points, they understand that's the beginning of an extended move. And on an extended move, what you should do, or what you should consider doing, is waiting for the exit signal. Let me just put, I want this to make sense, so let me just do this. All right, published entry. The exit signal is not something that I publish on an extended move. It's something that you, the trader, are taught to recognize when it happens on the chart. Red and falling CFMA1, step line, little black line, on the left side of that red and falling. When the move begins to run out of steam, doesn't mean the move's over each time, but what it means is the market is taking that pause. It's taking a rest. It's probably going into a retracement. And so price goes sideways. Now remember, these are 30-minute candles. Price starts to walk sideways. That step line crosses over the first green candle. I should turn off those alerts. Price cross. So what I really want you to take away from what I'm saying here is once we're in the extended move, you, the trader, look at the chart, and I teach you this step by step. You look at the chart, you see everything that I just talked about. Then when price starts to walk sideways, you do nothing. All right, there's John, which is good. We'll go ahead and have our chat with him. I'm going to come back and pick up right here, and I want to give you a very detailed look at this. So if you've been on the trial this week, okay, if you're currently on the trial, or if you're on the trial last week, any questions that you have, I want to get them clarified. I hear things sometimes in passing, or someone, you know, we're having a discussion, be it in Telegram or by phone, and they'll say, and I'll go, whoa, 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 what'd you just say? Oh, well, and this is one that comes up a lot. Okay, so you're on most of your trades, you're only looking for $100 profit. No. Nothing could be further from the truth. I'll pick up there when I come back. Let me get John's mic open.
His mic is open, and I'm up to date on the recaps.
Oh, thank you so much, Valerie. I appreciate that. Is your electricity okay now?
Yes, thank goodness.
What was it? Did you have a storm?
It was just a surge, and then we were out for a while, so transformer may have gotten hit in an accident.
Hey, you got an open mic. Okie doke. So it didn't damage any of your equipment or appliances, did it?
No. I
Hey,
thought
if
so
there's
for
any
a while.
washing
but
machine
we're good.
repairman in the audience, by the way, I need to talk to you. So, all right. Hey, John, welcome to the show.
Hi there, Valerie. How you doing?
Hey, John.
Thanks for doing well. Great. Thanks for the invite. Listen, this is an epic day again.
It is. We had a lot of those.
We called it yesterday. If you remember, I said that bottom looked pretty strong.
Mm-hmm.
Actually, it was an enormous bottom. It was an even bigger bottom than I thought, and it really has powered this market higher. And if you could put it up to the daily, see what it looks like on the daily, or can you put a 450-minute chart in?
I can put in whatever you want, John.
Try 450.
A 450-minute chart?
Yeah.
Okay. Let me just pop over here. I'll use this. Yes. Okay. Custom time. A 400. I don't believe I've ever ran a 450-minute chart before. I may not be running one now. That didn't seem to take.
Maybe 3 hours might do it, or 3 or 4 hours.
Well, there's 4 hour. Will that work? I don't know that this thing won't.
Try 3 hours. Try 3 hours. I might come in.
All right, let me just get rid of all the stuff, and I'll go to 3 hours.
What's that? Is that a 30-minute there? What's that chart?
That's a 4 hour.
Oh, the 4 hour. There you go. Look at the bottom on that thing. I mean, Jesus.
Oh yeah.
Oh no, you don't see it. No, on the 450 you see that up and down, that down bar and the up bar is another spike like the bottom here. So it's a double spike. That's why I wanted to have a look at it. Maybe on a 3 hour it might show up as that.
I think. Oh, yeah, there we go.
Yeah, there you go. Look at that. Look at that. Cheapest. It's can you? Yeah. How's the weekly look? Let's have a look at the weekly.
All right. Now for the weekly, well, we'll look, but I'm probably going to have to.
I mean, actually, before you go to that chart, hang on, just for the benefit of the audience, look at that. You see that big day, and this is sometimes what's so difficult to get when you're trying to pick the top of these things, which we were back up in late July. You see how we had one kind of a failed retest, that spike up to
this guy right
about
here?
30, 20, yeah, and then that failed.
Mm-hmm.
That was really your cue. That was probably the day of the thingy, the Fed, and that it was either that day or it was that was the day after the Fed when I think it rallied up and then it failed. Remember? That was the tariff day. That was the tariff day. So. That really was a signal to get short, and really you didn't have to cover until you saw this opposite spike down at the bottom. And now you've got two of them together. So look at the power of that potentially and what it's done to the market already.
Yeah, these are like bookends right here.
Yeah, they really are. They really are. And look, when you see these, it's always hard to do it at the time it's happening. But you have to. One rule that I've sort of learned is that the higher the quality bottom, the bigger the move. It's just because when people see how strong the bottom is unfolding, it actually you kind of got to take the attitude that whenever you're going into a trade, let's just say we turn the clock back 24 hours, and we talked about how the market could break out. Very, vertically, I said vertically higher, and I think nobody can disagree with that today. I mean, we're up 143 points on the NASDAQ, which is nothing short of phenomenal. And so you have to when you sort of get that feeling, you just got to go for it and try and stay with the trade as far as it'll take you. You know what I mean? So because it's sort of like gold. I mean, look. You know, I talked to Greg 3 months ago, and he said, "What's you know, how do I see the market?" I just said, you know, just get ready for the gold breakout. That's going to be the one to go for. And by the way, look at Royal Gold today. We just hit $125 a minute ago, and we would remember we had a couple of pullbacks. We had the first pullback that went from about 119 down to 111. If you were quick enough to get in there, you had a very easy rebound. Then there's another one, you know, a couple of days ago. But look at the performance of this stock. It's just phenomenal, and that's just epic. It's super bullish for gold. I would advise everybody to go back and Google a few days ago, Kyle Bass. On CNBC, they have probably a video of his conversation, because what he encapsulated in that video really kind of opens your eyes up to what's going on in the investment universe. And I talked to an investment banker a few hours ago, very smart guy, who's, you know, doing all kinds of incredible deals. And, you know, this guy's so focused on his niche, if you like, he's not paying any attention to gold and silver. And I said, listen, you better start paying attention, because as an investor, you need to understand what's going on in this gold arena. It's telling you something tectonic is going on. And Kyle Bass kind of, you know, elaborated on that rather brilliantly, frankly, in terms of, you know, comparing it to the Asian currency crisis of 1998. And remember, you know, there was a couple of, you know, we were in a raging bull market from 2005 to 2000, and we had a couple of interruptions in between. The first one, I'll never forget it. I mean, it was in 1997. There was a 1,000-point drop in a day on the Dow, and that kind of like stunned everybody. And I remember there was a kind of a visual of Wall Street, and they had all these media trucks with satellite trucks parked outside Wall Street. This was, you know, like something, a major event going on. Well, you know, that 1,000-point drop, I think it literally reversed almost the same day, you know, or the following day rather. You know, it kind of rebounded very quickly, which is symptomatic of a bull market, and you're seeing the same thing going on here today. You know, you had a sort of a really quick, short, sharp correction, which is the words we used a few days ago, and it came down to a level. But, you know, keep in mind, if you can go back to the S&P, actually, just so that we, because I think the S&P daily, to see what is this three-wave pullback looks like right now. Maybe you have to
cash market worker you want.
Okay, there you go. So look, remember what I said yesterday? If it gaps higher, look, it's almost left an island bottom down here, a 3-day island bottom. And look at those two little feet. I mean, jeepers. This is a high quality bottom, and potentially, I think this is going to push this market to new all-time highs, because we could have a literal, you know, a blowout rally rebound here, which could almost be a little bit like the last one. See how we had 4 or 5 up days off the last bottom. See that?
I do.
You know, we get 4 or 5 up days from here. You know, we'll be clipping new all-time highs. So this is very powerful, because I think this is still a kind of a 1-2 situation. We may be going into a third wave now. What would precipitate a third wave? Remember what I said. You know, don't forget that the market has had the biggest rally of all in history over the last 6 months. So the economy should start to improve relative to that rebound in the market over the coming months, right? So as the economy improves, it should drive stock prices higher. But if the dollar goes down, somebody asked me about the oil price this morning, and I didn't get through finishing telling them what I think. But I think that, you know, for all we know, there could be discussions going on right now about it. Because a few days ago or yesterday, the oil was the theme, where the oil stocks were down big time, and the oil price was down. how do you keep an equilibrium where the oil price doesn't go too high, but it's high enough to enable the U.S. shale fields to produce profitably and continue to expand production as they've been doing for most of this decade to, what are going to be all-time record production levels that they're already at. But, we're going to ultimately, we're already a net exporter, but we're going to be a net exporter pretty soon, because they're talking about, I think somebody said 24 million barrels a day by in the early 20s, potentially possible. If you're pushing out that much oil, if the price is uneconomical, that's going to be a problem. So, and it's going to be a problem for all the producers around the world. So the best solution right now is to lower the dollar, to get the dollar down, so that the price of oil rises just enough to keep everybody operating at a profit. And that's a pretty important, requirement actually for the future. Does it make sense?
Yeah, John, it does. It really does.
Right. And of course, the other benefit of that is, as I've said before, whenever the gold and the dollar are going higher, that is as bullish as it gets. And because when the dollar does go lower, when it does turn down, and it could be turning down any day now, the gold goes on the afterburners. If you think you've seen a strong up move already, you haven't seen nothing yet. If the dollar starts tanking, you'll see 1900 before you can, within a month or two, I think. And that, while it seems like a big number and it's almost an unassailable number, because we've been down in the dumps so long, stranger things have happened. It's almost like, you might have to think of gold as almost like the day after Trump's election, when literally, we went up 10,000 points in the Dow to levels that nobody could even fathom, before they happened. And I think we're in the same kind of groove now. We're in the emerging stages of a similar move up in the metals that's going to be awe-inspiring for people to see. And there's plenty of reasons why it's going to happen, especially if the yuan tanks over in China. That virtually seals the deal on the gold move, in my view.
Well, how's silver? Is silver keeping pace?
It is. It's holding up around the 1693 right now. We're turning back a little bit. We definitely hit. Look, we didn't quite get to 1500. We got to this 1520 area is definitely resistance for gold right now. It's being repelled from there. The platinum is having trouble getting out of the starting gate, which is amazing. The fact that the gold is acting so well versus the platinum. The palladium has pulled back rather substantially, which is something that bothers me a little bit, frankly, because again, the gold has ignored the palladium pullback so far, which is good. However, the palladium seems to have taken it may be because of the weakening of the economy and stuff like that. However, one of the surprises is, in spite of the fact that the Chinese are not buying agriculturals, the soybeans have rebounded here quite sharply in the last couple of days. I think that's a good omen. Secondly, I said the other day to have a buy stop at about 93 on the coffee. We shot back up. In fact, the coffee was looking very bullish a few days ago. The orange juice also rebounded very strongly. Could be, they have bottomed. Both of these markets look like they've bottomed. And I think the cotton market could be bottoming. By the way, I got most people out of the VIX, the TBIX, yesterday between 22 and 23. So I'm pretty happy about that. We're down to 18 right now. So we're making new lows on that VIX again. So it's pretty bullish for the market.
Let me bring up that chart. Which chart you want to look at?
The coffee.
Let's see if I can get the right ones there.
Yeah.
Try to remember.
September coffee futures would probably do the trick. Don't forget, it's still the cold season down there.
Okay, here's the one. September. That's a daily.
Okay, it hasn't come up very much yet, but you can see how it could potentially turn into a big move, a really big move, actually. Given the rally.
We had a higher high here, and then we had a lower low here.
You know what it looks like, Dwayne? It looks like a 5-point reversal in reverse. In fact,
that's about
in fact, it's kind of what happened to the stock market upside down. If you turn it upside down, we had a kind of a 5-point reversal that pushed us down to this this pullback that just happened. But I think there's a little bit of risk here, in terms of the possibility that this thing turns down. Again, that would be bad. But I would just try and look. I'm not saying buy today. If you're long from 93, I'd probably say stick with it, but put a stop. Otherwise, I would probably buy it higher. I'd rather buy it at 98, or close to going back over 100. Or if it suddenly does something dramatic, I'd probably want to do that. Maybe. I mean, it looks like it's probably going to be a kind of a doji for the week by the looks of it. If you can put the weekly up there for a second.
On coffee, yeah. There we go.
Not quite a doji, but it's an attempt at a reversal. So if we got a higher close tomorrow, closer to 100, we might go to a green kind of a doji reversal there, which would be kind of bullish. The reason I'm saying this is because if this thing does go, it's probably going to go big. It's probably going to go up to 120, 130 from here. But there's no, remember, we've been in a bear market for a long time. There's always a chance we could retest that 90 area again. So you have to keep that in mind.
Carl Icahn just did an interview on CNBC, and he says that he does not think rate cuts can fix problems facing the economy. I look at the economy, I look at, recent multiple all-time historic highs in the S&P 500, one after another. I hear everybody's got a job that wants one.
I disagree with that.
I think this black cloud hanging over our heads? I must have rose-colored glasses because I don't see it so clearly.
Nobody's getting the memo on this. The only people who listen to this show are aware of this because it's not being discussed in the mainstream. They don't realize that we've had a tenfold increase in interest rates, tenfold, and taking the pressure off and reducing that down and stopping this crazy quantitative tightening as well is probably going to do a lot to, maybe that's one of the reasons why the market's going up today. Taking off that quantitative tightening is pretty stimulative in of itself.
Oh, yeah.
And now don't forget, look, the Fed, you can read it two ways. The Fed is getting with the program with the rest of the world, right? Because the rest of the world's been in an easing mode. Now, Australia, we talked about it yesterday, Australia dropped their rates. So the Fed is setting the trend worldwide again. They're leading the pack to lower rates. That's ultimately going to be bullish. It's going to help. Secondly, psychologically, it's very bullish for the market because it's going to improve the multiples.
That's the Australian dollar.
Yeah, it's going to improve the multiples. Yeah, the Fed easing is going to improve multiples. That ultimately leads to a higher market. And thirdly, there's rumors out there they're going to start QE4, quantitative easing 4, and for those who need reminding, quantitative easing 3 was started in October of 2011. And we went up for the next 4 years. So I wouldn't underestimate the Fed's power, frankly.
Do you remember that quantitative easing cartoon? It was a video cartoon
Look at that reversal in the Aussie. That's pretty big.
Well, they did a surprise. They cut their rates, and I mentioned to somebody on Telegram the other night because it was on the overnight session when this happened, and they reported the news in the channel, and I said I think this might be the beginning of sort of a chain reaction, and you're going to see, one country after another follow suit and do something similar.
Yeah, no, for sure. And that's all good stuff.
Quantitative easing cartoon on YouTube. This thing was priceless. It was written, I can't believe I found it that quickly. It's 6 minutes, but I can play it and make it so everybody can hear it. How pressed are you for time? If you're pressed, I'll show it after you and I are done. John.
Yeah, sorry. What were you saying?
It's 6 minutes. I'm going to play it for the audience. I don't know how short you are on time today. I can play it after you and I are done, or I can play it right now so that you can hear it as well. If you've never seen it, it's pretty fascinating how they nail it in such a simple manner. Because this was back when no one had ever heard of quantitative easing. This was like, what is that? So do you want to listen to it or not?
Yeah, sure. Play it.
Yeah. All right, I'll bring it up.
Did you hear about the Fed? No. What about the Fed?
Okay, let me put it up on this chart here. Put it on this platform. There we go. All right, and I got to switch the audio so everybody can hear it. Guys, if you never heard this before, you're gonna. Well, we'll talk about it after it's done. All right, I gotta get the volume up, and then I'll turn it up a little bit.
It means they are going to make large asset purchases via POMO.
What does that mean?
It means they are going to expand their... Did you hear about the Fed?
No. What about the Fed?
They announced another round of the quantitative easing.
What does that mean?
It means they are going to make large asset purchases via POMO.
What does that mean?
It means they are going to expand their balance sheet and buy treasuries.
What does that mean?
It means they are going to print a ton of money.
So why do they call it the quantitative easing? Why don't they just call it the printing money?
Because the printing money is the last refuge of failed economic empires and banana republics, and the Fed doesn't want to admit this is their only idea.
So why do they want to print the money?
Because they say we have the deflation, and the deflation is very bad.
What is the deflation?
The deflation is when prices of the things we buy go down.
Isn't it good? Doesn't it mean the people can buy more of the stuff?
Yes, but the Fed said this is bad, especially during the recession.
So they think that during the recession, when the people have less money to buy the stuff, it is bad that the prices go down?
Yes, the Fed would rather have the inflation.
So why does the Fed think we have the deflation?
Because the CPI said so.
But aren't the food prices higher than a year ago?
Yes.
Aren't the gas prices higher than a year ago?
Yes.
Aren't the healthcare costs higher than a year ago?
Yes.
Aren't tuition prices higher than a year ago?
Yes.
Aren't the taxes higher than a year ago?
Yes.
Aren't the subway fares higher than a year ago?
Yes.
Aren't the stock prices higher than a year ago?
Yes.
Aren't the bond prices higher than a year ago?
Yes.
So what is deflating right now?
The only thing deflating that I can see is the Fed's credibility.
Did they have a lot of credibility to start with?
No.
Why not?
Because the Fed has been wrong about every major economic development in the past 20 years.
You mean they didn't see the internet stock bubble?
No. In fact, they helped fuel the internet stock bubble.
And they didn't see the housing bubble?
No, in fact, they helped cause the housing bubble.
And they didn't see the subprime crisis?
No, in fact, they told us subprime problems were contained right before the shit hit the fan and the Lehman went bankrupt.
So has the Fed ever been right about anything?
Let me see if I can think of anything. No, nothing.
Who runs the Fed?
The Fed is run by the Ben Bernanke.
Does the Ben Bernanke have a lot of business experience?
No, the Ben Bernanke has no business experience.
Does the Ben Bernanke have a lot of policy experience?
No, the Ben Bernanke has no policy experience.
Has the Ben Bernanke ever run in an election?
No, the Ben Bernanke has never run in an election.
So what qualifies him to run the Fed?
I don't know, maybe the fact that he has a nice beard.
But my plumber also has a nice beard, and I would not trust him to play God with the economy.
No, although when you call the plumber to fix something that is broken, they usually fix it, not break it more.
This is true. The plumber is clearly smarter than the Ben Bernanke.
Well, that is why he became a plumber and not an economist.
How does the Fed execute the quantitative easing?
They print the money, and then they buy the treasury bonds.
Do they buy the treasury bonds from the Treasury Department?
No, they buy the treasury bonds from the Goldman Sachs.
You must be shitting me.
No.
So let me get this straight. If I want to buy the treasury bonds with my money, I can buy them directly from the Treasury.
Yes.
And if you want to buy the treasury bonds with your money, you can buy them from the Treasury.
Right.
But if the Ben Bernanke wants to buy the treasury bonds using the American people's money, he does not buy them from the Treasury, he buys them from the Goldman Sachs?
Exactly.
And does the Goldman Sachs give him a good price?
Of course not, they are the Goldman Sachs. They make their living ripping off the American people.
But how is the Goldman Sachs able to do this?
The Fed announces what it is going to buy and when it is going to buy before it does the trade.
So the Goldman Sachs can front-run the Fed and give them the worst possible price on the treasury bonds?
Yes, exactly.
And the Fed is okay with this blatant theft from the American people?
Of course, otherwise, the Fed would just buy the treasury bonds directly from the Treasury Department.
Who inside the Fed is responsible for the buying of the treasury bonds?
The buying of the treasury bonds is conducted by the New York branch of the Federal Reserve.
And who is in charge of the New York branch?
The head of the New York branch is the William Dudley.
And what did the William Dudley do before running the New York Fed?
Before running the New York Fed, the William Dudley was a partner at the Goldman Sachs.
So the guy in charge of the American people's money when dealing with the Goldman Sachs used to be a partner at the Goldman Sachs?
Yes.
And nobody has a problem with this?
Apparently not.
Is this an episode of The Twilight Zone?
I don't think so.
Are you sure?
Pretty sure.
So what you are telling me is that the Fed thinks prices are going down, when in fact they are going up?
Yep.
And they think during the recession, with the high unemployment, it is better if the things people need to buy cost more money.
Correct. According to the Ben Bernanke, the inflation will create the jobs and improve the housing market.
Has this ever been tried before?
Yes, just last year the Fed tried the quantitative easing with $2 trillion.
Did that create the jobs?
No.
Did it help the housing market?
Not at all.
Did it help anybody at all?
Yes, it helped the Goldman Sachs.
How much of the money are they printing now?
$600 billion.
So even though the first $2 trillion did not create the jobs or improve the housing market, the Fed decided to do another $600 billion anyway?
Yes.
Who put the Ben Bernanke in charge?
The Ben Bernanke was first appointed by the President Bush, then he was reappointed by the President Obama.
But wasn't the President Obama supposed to bring the change?
Yes.
How is putting in charge the same fool who has been wrong about everything, the change?
Well, under the President Bush, the Ben Bernanke only blew up the American economy. Under the President Obama, he is working on blowing up the entire global economy.
That does not sound like the change we can believe in.
Definitely not.
Who else supports the Ben Bernanke?
Most economists around the world think the quantitative easing is very dangerous.
Does anyone think it is a good idea?
Yes, the people at the Goldman Sachs.
Is this some kind of nightmare?
No, it is very real.
I want to bang my head against the wall.
You should not do that.
Why not?
Because the healthcare is too expensive.
But didn't the President Obama fix that?
No, but that is the subject of a whole other video. Goodbye.
Is that awesome or what? That is just, that thing just nails it. Even a child could understand
So,
that.
so is this the CFRN?
Hang on, let me turn this
said
on.
they are ready to do more quantity.
Hey, Dr. Tom, how you doing?
Good. So we're having the CFRN comedy hour now.
Did you see that back when it first came out, when they were doing that second round of the quantitative easing? That's when nobody had heard the words really before. I mean, they'd already done to the tune of $2 trillion, but the way they break it down, I mean, if no one can see the criminal element in this, a 5-year-old can understand that, I think, and that's just what made it so good. I hadn't watched.
I only caught the very last part, so please send me the link, okay?
Oh yeah, I sure will.
Yeah, back then everybody thought QE2 was the big ship, you know.
Right. John, you still with us? Yeah, he had to take a call. Okay, where you want to
I
start?
just want to make one comment.
Oh,
We're
there you go,
rallying
John.
to,
Yeah, I was waiting.
we're rallying pretty sharply on the S&P right now.
Oh yeah, take a look.
I would
right
be
here.
a little bit cautious. I'd be a little bit cautious up here because we kind of had a three-wave rally off the lows, so that invites the possible pullback here.
Well, John, we got a link to the trading zone right overhead at 2935/26.
Right. So, look, if we keep going, obviously it's going to be, like we said, if they start gapping up for the next 4 or 5 days, it's an extraordinarily bullish situation. But you have to be a little bit careful right here, especially Thursday afternoon. As long as we don't go down this afternoon, I think we're okay. But just be ready for a possible reversal because we are up a lot right now. So.
Okay.
Listen, great to hear you, Tom. Have a great show, and we're onward and upward with the metals.
Yes, definitely. That's what I'm talking about today.
Okay, all the best. Thank you.
All right, thanks, John. So, Dr. Tom, ladies and gentlemen,
yes, sir.
It's Dr. Tom Day. Welcome, Dr. Tom. And we're going to talk about. You said we're going to talk about metals today.
We are going to talk about specifically the king of all metals, the noble metal, gold.
So noble. Now, folks, if you want to know more about what we talk about every Thursday when we talk with Dr. Tom, he's the king of investment grade gold. To learn more, you can point your browser to CFRN Gold. That's one word, CFRN Gold.com, as you see displayed up on my screen. And if they visit there, tell them what they're going to receive.
Knowledge, wisdom, empowerment, safety. I think there's a few others, but
sweet.
That's the general idea.
I'm going to go there.
Yeah, folks, if you go there, you fill out a little form, and we will send you the Gold Education Starter Package. That consists of some very important articles, reports, and also some educational but also entertaining videos. And not as entertaining as the one that Dwayne just played, but anyway, the main thing is you can learn how to keep yourself safe, and you'll also receive invitation to our webinars. I've had people who have master's degrees in finance, MBAs, economic majors, and so on, tell me that listening to our webinars for 1 year, they learn more about the real world of investing than they did in all their years in graduate school. So I think that's a pretty good
that is a great testimony. Yeah, that's a great yeah, very good. Did you want the charts?
If you don't mind.
I don't. Guys, this zone-to-zone move that we've just had in the S&P. Now we were still just a point or so shy, a few points shy of touching that zone. Zones are an area, as I tell you, just like fibs. Fibs are an area. Yes, when we draw fibs, it prints an exact number on the chart. However, you don't always turn at the 38% or the 50 or the 62. If you can embrace the fact that it's an area, just like zone. Now, like right here, we get accustomed to this. We get accustomed to price, turning on a dime right at the zone. Happens all the time. But there will be times when we either spike above it or just come a little bit shy. Now this zone-to-zone move, 54 points. 54 points at $50 per point is $2,700 per contract. if you've earned the right to trade 10 contracts. And that's the only way you should be trading 10 contracts, is to earn the right. I explain that every day. I'll explain it again before the show's over. A 10 contract trader who got into this zone and is exiting at this zone, it's a $27,000 move since 4 a.m. this morning. Now, what does it cost you to trade 10 contracts? $5,000. So, see, money's not the issue. Well, it is the issue, but it's always the issue. So, margin required to participate in this trade, $500 per contract, 10 contracts, $5,000. Okay. Of course, you got to have room for error, drawdown, stop outs, etc. That's not my point. My point is if you go in and start trading 10 contracts out of the gate, you won't be trading long. Our method starts you in SIM. We want to see you put together, as you're learning our methodology, we want to see you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Then the 24/20 blueprint will give you the green light to go live with one contract and one only. Next step of the plan, we want you to increase your account balance by $2,000 before you add the second contract. When it's time to add the second contract, you'll be adding it with profit you earned in the market. You are growing your trading business with internal funding. There is no stronger way, no better way that I know of to build a real business on a solid foundation. After the second contract, you'll go to a calendar-based method. You'll know exactly what day you're going to add your third, your fourth, your fifth, if everything goes well. As we know in life, there's always bumps in the highway. So we understand that, and we have ways of handling those bumps. Now, the 24/20 blueprint designed to take you from 1 to 20 contracts over a period of 24 months. If you're following the plan, no way you're going to get there any sooner. The chance of you getting there right on the nose in 24 months is probably slim to none because, again, life happens. You could get sick, other things could happen in your life, or you hit a rough patch. So we come out of the live market, we go back into SIM, you and I do a couple of mentoring sessions until we sort it out. Then, after you've regained your confidence, go right back in where you left off. So it takes as long as it takes. Now, the 24/20 blueprint, as I said, is designed to take you from 1 to 20 over a period of 24 months. This example I just used was based on 10 contracts from 4 o'clock this morning to now. For the 10 contract trader, $27,000 move. It's tempting. It's oh so tempting. When you've got money in your account and you know that you can trade that size. But I'm telling you, even if you're financially prepared, if you're just getting going, you're not emotionally prepared. And you're going to blow up your account. So please, I beseech you, my brethren, don't do it. Be patient. Keep your head down, shoulder to the wheel, nose to the grindstone, all that stuff. We will help you get there, okay? We'll do everything we can. There's no guarantee you'll ever get there. There's no guarantee you'll follow the rules. There's no guarantee you won't blow up your account. If, however, you can rid yourself of the preconceived notions, if you can understand this is a business based on probabilities, not your prowess as a trader, well, whatever that means. It is a business based on probabilities. As long as you have a definable edge and the courage to apply the edge every time the proper conditions present themselves, then it becomes a high probability that you can become a consistently profitable trader, whether you're brand new or, like many of our clients, have been struggling for years to be consistently profitable. More about that later. I'm taking up Dr. Tom's precious time. let me shoot you over these charts as I promised before I went into that soapbox rant. Make presenter, Dr. Tom. It's all yours. Take it away.
Okay, thank you. No, actually, I was kind of interested in what you were saying because I've always taught something similar. You know, that you never start with real money. You always sim trade, as you call it, paper trade, a lot of different names for it. And only when you're winning 80% of the time do you go to live trading. And then what I tell people is start with a small amount, because as soon as you go live with real money, then the dynamic changes, the emotions change. I mean, you know you're not really losing anything if you lose when you're paper trading, so you're not so scared. And so again, only when you've gotten up to where you're winning at least 80% of the time do you ever go to whatever your size is. And the size, of course, is different for different people. Of course.
Yeah, I'm not being a smart aleck, but you know, you just touched on one of the things that I don't know why it's such a it bugs me, and I'm not saying you bugged me. It's just the terminology, and everybody uses it. So I'm not pointing you out and saying you're the bad guy. But when we get up and go to work every day, whether we're a doctor, a lawyer, a plumber, or a ditch digger, when we come home at the end of the week, do we tell the wife how much money we won?
I don't.
I don't. But yet, traders can't seem to separate themselves from that gambling mentality. And so I'm always on my guys. Do not let me hear you say that. Now, I know everybody says it, and nobody means any harm. But I said, you know what? If you use that kind of terminology, pretty soon you're going to be telling me about, you've had so many consistent days in a row, and now you're playing with the house's money. Well, if it's the house's money, I guess the house is going to keep it, and that's usually what ends up happening. So I'm not beating you up on, I just hadn't said that to the audience yet today, and so now I have. Go ahead.
Okay.
Hey, honey, you're not going to believe how much money I won at work this week. It's a paycheck. You earned that money. See, that's the problem. Traders, they don't think they deserve this kind of money. Nobody actually thinks that they deserve to sit down at 4 o'clock this morning and over the course of, 6 hours, 8 hours, whatever it is, make 27 grand. Well, that's just ridiculous. It's probably not even legal. Well, it is. All right, I'm done. Wore out. You wore me out, Dr. Tom. Go ahead. This is your show.
Well, I will say this. What I really don't do is tell her what I lose.
Well, you know what they say, what you win in Vegas stays in Vegas.
One time I lost $50,000 in one day.
Oh my.
And that was a kind of a rough one. And so, I just put my head down and worked and got it back. I made some misjudgments.
My first big win, Dr. Tom, the opening bell on Wall Street, most of the year here in Phoenix is 6:30 a.m. So I was up downtown to the office, got my coffee, pull up in front of the platform there. I was trading the Russell at the time, put on a trade, and by 6:45 a.m. Eastern, I had made $5 grand.
Cool.
I made $5 grand. So I took a little break, went outside, talked to God, thanked him for his mercy and grace. Then I gave him a list of the things that I would do, with that money. Okay, so much is going here, so much is going here, and I'm going to put this here. I just wanted to make sure he understood I was doing this to build his kingdom. I already had a job, this was to build the kingdom. So once I felt satisfied with the conversation he and I had, I went back into the office, sat down in my chair, and by the closing bell, I owed the market money. I was negative by a couple grand. I drove home absolutely shell-shocked. I didn't know what to say, how to act. I could not believe what had just happened. When I came in the front door, my wife took one look at me and she goes, "What's wrong, honey?" I said, "Nothing." She said, No. We've been married too many years. That look on your face, something's wrong." I said, "Just let me deal with it, please." I came upstairs, sat in my office, head down, and the only thing I could find to console myself was, if you can lose that much in one day, Dwayne, then you can also earn that much in one day. And that allowed me to get some restless sleep. And that was, and I'm not going to say I never did that again, but it was the beginning of the turning point that led me to approach this whole thing somewhat differently. But yeah, but 50 grand, I don't know what I would have done if I'd have dropped that. I guess I would have figured out, we're such adaptable creatures, when our environment changes, our situation, our circumstances, God really did a great job in enabling us to adapt to just about anything. And that
well, the thing is that,
yeah, go ahead.
That's more of a problem with men than women. I've taught lots of classes on the psychology of trading, and if I have a mixed class, which usually is more men than women, but there'll always be some women, I'll ask everybody to say who they are, and most times the women will say, "Well, I'm a wife, or I'm a mother, I'm a sister," or that kind of thing.
I'm a lover. I'm a brother. I'm a lover. There's a song there. Go ahead.
And the men will say, "I'm an engineer, I'm a trader, I'm a stockbroker, I'm a this or I'm a that." So men tend to identify by their work, whereas women tend to identify by their relationships. It's not always true, but that's in general. So if a trader starts to identify...
Oh, sorry, please keep going.
If a trader starts to get his self-identity from his trading,
yes,
then he should stop trading,
yes,
until he gets his head straight. Anyway, gold has gone up like crazy.
Hey, go.
$1,500 per ounce. So we're going to talk about gold's huge, or as the president would say, huge price increase.
There's never been a price increase like this before. It's the first price. I love the way he can talk the same point 3 different ways. That man's got more superlatives in his language than. But I love to listen to him.
Me too. He knows how to talk. Anyway, we don't just shotgun out forecasts. I know your mailbox is probably full of them like mine is. And we used to have a guy in the stockbrokerage business. They called him the cold call cowboy. And yeah, what he would do was he would send out thousands of letters and keep track of what he sent out. And he sent out 10 different stocks. And so he'd send out one stock alert to 10,000 people, another to another 10,000, and so on. Okay, if 2 or 3 of the stocks went up, then he would just drop all the other people that he sent bad forecasts to.
Right.
And he would send out another stock pick to these 3 groups of people that the stock pick worked. If 2 of them worked, he'd follow it up again. After 6 weeks of this, then he would cold call. Only it wasn't a cold call by that time because he was a household name. They'd seen his name in the envelopes.
Left on that list thought he was an absolute genius because he nailed it every time.
That's right. If he called them, it was because he was right in his forecast 6 weeks in a row. Now, they never knew about all the thousands, hundreds of thousands of other people. But the point is, you know, if you forecast enough times, you're going to be right sometime. You know, even a broken clock is right twice a day.
Even a blind squirrel finds an acorn every now and then.
There you go. So we don't do that. We don't cry wolf unless it's something real. Unlike many forecasters, we don't just constantly send out, you know, alerts hoping that one day we're going to be right. I want to talk just briefly here about a short series of 3 alerts that I sent out over a period of 7 months about gold, only because I was convinced the time was right. And I sent the same one to everybody. I've got 33,800 and some people on my email list, so I don't play games. December 21st, I said, stocks are down, gold's up, take action. If you remember last year, stocks were really suffering there towards the end of the year.
Worst December since 1932.
That's true.
Yep.
Okay. So a few months later in March, I said gold is set for a dramatic rise in price. And then this, just a little over a month ago, I sent out gold alert, gold's next target price 1530, probably this year. Now think about where gold was at each of the times that those alerts were sent out. December 1, gold was around 1200. March, gold was around 13. I think July, the first part of July was around maybe 1350.
Okay.
I don't think it had hit 14 yet. So here was number 1. Here it is. Gold was $1,200 an ounce. We sent out a special alert announcing the new gold market was about to begin. Here's some things that I'm quoting from that. What are the signs of the time? What would be your warning that the stock markets are about to crash in a serious way? You've already seen those signs. The email, this entire email is detailed the signs. Just your common sense should tell you that with stocks dropping huge amounts and then bouncing part way back, the end is near. I still can't convince most people who trade stocks that the stock market can't go up forever. It's like a roller coaster.
Don't grow to the sky.
Have you ever seen a roller coaster that just keeps going up and up and up? If there was one, I'd be afraid to be in that car, because eventually when it came to the end of the road, that's going to fall. And the higher it is, the harder you fall.
Yeah, life is a roller coaster. You know, we spend so much time and energy in our life trying to get all the ducks lined up in a row, everything perfect. We just think somehow that day is actually going to come. But life is hills and valleys. That's what life is. When you're in the valley, just remember there's a mountaintop in your future. And when you're on the mountaintop, don't forget there's a valley coming up. It's not a conspiracy. God's not out to get you. That's just what life does. Hills and valleys, good times, bad times. When that sucker goes flat, beep, it's over, man. So quit trying to flatline your life. Enjoy the climb. And when you're going down, whee, because you're going to go right back up again.
Yeah, I always just tell myself a valley's nothing but an upside down mountain.
There you go.
So,
can we get cotton
in the same alert, I said, will you be like the people in 2008 who waited until 50% of their money had evaporated before you take action? Or will you be like the wise servant in Matthew 25 who multiplied his gold? People say, what do you mean gold? It was a talent. Well, what do you think a talent was?
He could sing.
A talent was a bag of gold.
Right.
No, literally. It was a bag of gold that was worth an average working man's wages of 20 years or a skilled workman's wage for 10 years. So don't bury your asses in the ground, in this case, in the stock market or also in CDs. Okay, gold alert number 2. In March, when gold was $1,300 an ounce, we sent out another alert that the new gold market was now officially on a roll. Remember, it's just been going sideways for years. We said, don't wait until gold hits $1,400 to buy. That was just 4 months ago. And I also added, I'm not writing this to cause panic. I just want you to do what the Bible says to do. Be sensible and store up precious treasures. Don't waste them like a fool. It's from Proverbs 21:20. And I ended it by saying, not to be too blunt, but in these times, anyone who doesn't have at least a part of their assets in gold is foolish and will live to regret it. Just a small portion of your assets could, in gold, of course, could make the difference in whether you have a place to live or food to eat in case of a serious financial disruption. We dodged the big bullet in 2008. We may not be so fortunate this time. I mean, we came so close, literally, according to a lot of people who were insiders and all the backroom conversations that took place to save the world economy. We were within 24 hours of a global debt crisis. This time it's going to be worse. And finally, alert number 3, just about a month ago, we sent out this warning, gold alert, gold's next target 1530, probably this year. Well, we're 30 points away from that. And we've seen what's happened, so enough said on that. I said, the short story is that if there's ever been a time to buy gold in the last decade, it is today. It's at a 6-year high. It's actually a 6.5-year high now. Its current price momentum makes this a confirmed breakout from the range that it's been. Spot gold, what we call bullion, has been stuck at a range of roughly 1,200 to 13 for about 5 years now. But now the banks and the politicians can no longer suppress the price of gold, and the world's smartest investors, including the world's central banks, are buying gold as fast as they can. You know why gold dropped from 1,900 down to 1,000?
Do I know why?
Yeah.
Why?
The major causative factor was central banks, which represent their governments, were looking bad. The higher gold went, the worse their money was, the less it would buy. So it was in their interest to suppress the price of gold. So they literally sold tons of gold and dropped it from 1,900 down to 1,700. Then it stayed in that range for a while, and then they decided that's not low enough. So they hit it again, and they sold tons and tons more of gold till finally, when it got down, as low as $1,000, they started buying back and getting back the same amount of gold that they'd had at roughly half the price. And then they pretty much sat there. They haven't done much. But now, in spite of their best efforts, the bankers and the politicians can't suppress gold anymore. So they're saying, okay, can't fight City Hall. They're buying gold now. So when you see the central banks as net buyers, as they are now, we're going to see gold keep going. Everybody's been saying, for the last couple of years, if gold ever breaks 1,500, then the sky's the limit. Well, we're there. So this will make you laugh, but here's some recent major headlines. Well, I don't know if it make you laugh, but it's kind of ironic. Gold makes its move. Gold closes above 1,400. That was a big deal, and it wasn't that long ago. New gold 6-year high. New records 3 days in a row. Gold soars above 1,500. Gold closes above 1,500. I'm going to address each of these briefly, but let's take the first one. Gold makes its move. It's been range bound for the last 5 years. The governments and the central banks have done their best to suppress gold, but gold is the only money, and it's where the world goes for safety when things start getting rough. There's a lot of stuff happening that's not being reported. We're only hearing the nice stuff, when the market goes up or unemployment goes down and so on. We're not hearing about a lot of the dangerous things that are happening behind the scenes. So they can try, but not even the government can stop the trend. Gold has been range bound. You see, it's just been going sideways. And I think everybody here knows what a trading range is, so I don't need to define it. Now here's a decade of gold prices. You can see the average, the high, and the low. And you see that if you look for about the last 5 years, the average price of gold has been roughly around $1,200. Of course, I should have been 2019 year to date, because in case you notice, Christmas hasn't happened yet. But as you teach, I've written this for a general audience, not just for your group, so they know it's important to view charts in different time frames, because each time frame gives you a different perspective. So let's look at gold over the last 10 years. We see going from 09 up to today's date. We saw gold hit $1,900, okay? And then you see it going down and sort of hanging around that 1,700 range there for a little bit. And then it just started dropping and dropping and dropping. And it didn't really start to stabilize until 2015. And that was around 1,100. And then you see it in the range there. But now, I mean, anybody looking at this chart can see this is a true breakout. Okay. Now, if you look at 1 year gold, actually, let's look at 5 year first. You can see the range better there, 11 to 1,300, roughly, but then more recently in the 12 to 1,300 range. I had these slides out of order. And then there's the 1 year. Last August, what is it, around 1,220? And the highest has been 1,350 until this June. Dropped back off a little bit. Then we started, everybody's all excited about it getting to 1,400, because that's a big psychological barrier. But now, of course, we've gone far past it. So the headline, gold closes above 1,400. This is after we saw these headlines. CNBC was saying, will gold ever top $1,300 again? That's a financial channel, right? JP Morgan and Credit Suisse, two of the largest investment banks. Morgan's 2019 gold forecast was $1,294. Credit Suisse was $1,250. Scotiabank, I thought this was an interesting title. Gold's 1,300 is the new 1,200. It had been 1,200 for so long that that was the normal. But now 13 is the new normal. Okay. Kitco, earlier this year, they've been pretty good, but they said gold needs inflation to break 1,300. Well, we don't have any more inflation now than we had in January. So it obviously wasn't inflation. We have inflation, but I'm saying it hasn't changed since then. And they said it would need that to get above 1,300. Well, it's got above 1,500 without increasing inflation. Thank you very much. Merrill Lynch, gold could average 1,350 in 2019, and HSBC expect gold to average 1,292 in 2019. Did I say 2016? It's 2019. Now, see those words average there? Those are weasel words, because if they put their head out on the chopping block like Morgan and Credit Suisse did, we're forecasting 1,294, we're forecasting 1,250. It's easier to hold them to that. If Merrill says, well, we think gold's going to average 1,350, or HSBC is going to average 1,292, who's going to take the time to add up all the daily closing prices and find out whether it really did average it? So they could still seem to be right when they really weren't. Okay. Headline, new gold 6-year highs. Now this I always get a chuckle out of, because every time something happens in the stock market or the bond market or the real estate market, or in this case, the gold market, you get all these different pundits on the media giving all these different reasons. Well, they can't all be right. Okay. One pundit was saying it's rising stock market risks, the risk that the market's gotten too high. And of course, it's down quite a bit right now. So I'm sure that's part of it. Fears of a global recession, trade worries. People are worried Trump's going to take off China, rising risks, whatever that is. We always have, I have risks. Iran fears, bond yields collapse. Now, gold going up to a new 6.5-year high can't be for all those reasons. Maybe a little bit of each, but none of them is the reason. Gold's going up for a lot more fundamental reasons, and that's the fact that it's real money, and people are finally realizing that the paper that they've been trusting is not real money. New record highs 3 days in a row. From August 7th to 9th, gold broke a new record every day. Why is it important? It's an important indicator of momentum. Momentum is the rate of acceleration of a security's price or volume. That is, it's the speed at which the price is changing. Now let's look at this. Gold took 8 months to rise from an average of 1,200 to 13. Then in a shorter period of time, 6 months, it rose from 13 to 14. But it only took 1 month, actually a little less than 1 month, to rise from 14 to 1,500. Folks, that's what momentum is all about. Remember, it's the rate of acceleration, the rate of change. Okay. All right. Gold soars above $1,500. Well, for years, experts have been saying that when gold breaks this extremely important $1,500 psychological barrier, nothing is there to stop it until it hits 1,900. That's because most of the overhead supply has been absorbed. Okay. Let me just talk about overhead supply for a second, and I'll talk about it in stock terms, just because that's something everyone can relate to. We have a $50 stock. A lot of people buy it because they think it's a good deal. Then it goes up to $60. Then more people buy it, and then 70, and 80, and then 90, and then 100. Okay. Hits 100, turns around, and it drops back down below 50. Okay. Some people are getting out along the way, but a lot of people think that hope is a strategy. And I bought this stock for a reason, so I just know it's going to go up. Well, and it's not going to make it go up. And everybody knows that stocks go down 2 to 3 times as fast as they go up. When they turn around with a vengeance. So now stock's back down at 50, and it starts to rise up. There's a lot of other levels along the way, 52, 55, 57. Right. Well, let's just go with the $10 breaks. It starts to move up. Good news. They got a contract. They got a drug approved, whatever. And it gets up to 60, and then it stalls out. And it just sits there for a while. Okay? That's because all the people who bought it at 60 and who've been praying for the last 6 months for it to get back to 60 are saying, Lord, I promise you, if it ever gets to 60, I can sell it. I'll never buy a stock again. I'll never trade again. Right? Yeah. Yeah. So it has to absorb all that buying at 60. Okay. Then it starts to move again. Same thing happens at 70, 80, 90, and the people at 100. Now, once it breaks through 100, what is there to stop it from going up forever, really? Just the fact that nothing goes up forever. But I mean, there's no overhead supply. Well, with gold, it hit 1900, but an awful lot of the people who bought it between 1800 and 1900. You know, the slow learners. And most of those people have sold out long ago. When it got down to 13, 12, 1100, they sold. They said, it's never going back to 1900.
Yeah, right.
And I'm not saying there isn't any overhead supply. I'm just saying there is very little overhead supply. There's very little, there's very few people who put a lot of money into gold between 1500 and 1900 that are left. Okay, they've either gotten out or they just held.
A similar story with Bitcoin.
Yeah, that's true. I mean, I never worry when Bitcoin goes down because I've seen it go down as much as 90%, you know, 5, 6, 7 times.
Yeah.
But it's like the cat with 9 lives.
It dropped $4,000 not too long ago over a couple sessions and came roaring right back.
Yeah. So it always does. But sometimes it creates a little angina, you know, when it sits there and doesn't do anything for a while. So gold closes above 1500. That's the more important headline than gold hits 1500. Again, everybody that trades anything knows that an intraday target milestone is important, yes. Right? No question about it. But
not as
unless it closes.
Yeah.
I'm sorry?
I was just saying, but not as important as what you're about to just say.
Yeah. And do you know why that is?
Tell me.
It's because most people, when they look at stock prices, they're looking at a chart, right?
Okay.
I mean, not a chart, but a table. That's what I'm trying to say. And so they only see the closing price. Mm-hmm. It's not that the closing is actually really more important, but psychologically it's more important because a lot of people will see it when it closes above 1500, and it could have hit 1500 17 times already, and they never knew about it because they don't watch it closely.
Right.
Okay.
No, you're right.
So closing is a really important milestone. This is true of anything that you can track on a chart. So as I said many times, it's hit an important, I call it a trigger point, several times, often even over several different weeks before it finally fires. The trigger gets pulled hard enough to close above. The close implies stability and staying power. So, will we see a pullback? I wrote this yesterday, and I said very likely we will. Well, we saw a little bit of pullback already today.
Yeah, we
I think it went down to 1490. But you've heard of the dead cat bounce, right?
I have.
When a stock or an index drops like a rock, it will most often bounce because even a dead cat will bounce a few feet. And I need to issue a disclaimer here.
No
cats were harmed in the making of this PowerPoint. Okay. Right. But this is the opposite of a dead cat bounce. You know, this is a live cat leap. We had a Maine Coon cat, and every once in a while we hear him walking around on the roof. I still have not figured out how he gets up on
what is a
that
Maine
roof.
Coon cat? It's just a
A
breed?
Maine Coon.
Mm-hmm.
It's a breed.
Okay.
Like spelled like the word the state of Maine, but they're pretty big cat, and they look
They're big
even
guys.
bigger
Yes.
because they have big fluffy fur. You know, so and they're really.
What did
nice
you just say,
cats.
Valerie? What did you say?
I said they're very large breed. I mean, they can weigh, up to 17 pounds and not be fat. They're long, they're tall, and put your feet up on the counters in the kitchen.
Is that what Garfield is?
No, I don't think so.
Do they all like meatloaf?
Maybe.
You're right about that, though, Valerie. I mean, he could just stand up, put his feet on the counter. If he wants to, he can pull himself up. He knows what's going to happen if he does. Somebody doesn't do it, but I think what he does, we have this shed out back close to the house. He leaps up on that, and then he leaps from the shed up onto the lower part of the roof. But
Yeah, that makes sense.
anyway, what's happening here is the opposite of a dead cat bounce. It's going to pull. It could pull back lower. It could pull back to 1400, but the momentum. I don't think it's going to happen. The momentum is there. Every day, it stays in the neighborhood of 1500 is another strengthening, and every day it stays above it is even more so. So, like all money, gold will often take a breather to consolidate. I'm not talking about stocks here, but I'm talking about currencies. Currencies that go up a lot, they'll pull back, they'll consolidate, but then they'll move back up again.
And that's a sign of a healthy market. You know, these parabolic moves with no pullbacks, I don't think I've ever seen one end well.
You're absolutely right. I often use the example of forest fires. I used to be a firefighter, and we...
Good Lord, man, what have you not done?
Well, I've never been a prostitute.
I'm serious. You are the Renaissance man. You have done more things in your life than Indiana Jones.
I've never been a brain surgeon.
Well, I tried. I was using a video on YouTube, but I kept falling asleep when it was time to administer the anesthesia. So, and I never got it completed.
Because you put it over your mouth instead of the patient's. That's why.
No, I was doing surgery on myself. That's the problem.
Oh, I get you. That was a joke.
Yeah.
It's like when I was in the Marine Corps. Did you hear about the Marine that died during saluting practice?
No.
He was a karate expert, so when he killed himself saluting. Okay, back to business, because this is serious business.
It is.
In firefighting, forest fires can really get out of control really easily if you allow fire load to build up. That's fallen trees, dead branches, leaves that are all dry. Forest fires are actually a good thing. God designed this world pretty smart. Like, usually forest fires start with a lightning strike, and they'll burn off that dead underbrush, and it actually helps the live trees grow better. And also, there's certain trees that have like pods on them that they have their seeds in them, and without intense heat, those pods never open, the seeds never fall to the ground, and new trees never grow.
Now that I didn't know.
Yeah, there's a lot of interesting things, parallels you can draw. So we would go out when things were normal and it's not real dry weather or anything like that. We don't want to start a forest fire. And we would go out with gas cans that would spray small amounts of gas and pick certain areas, surround them with fire trucks so they can't get out of control, and then set it on fire. We burn off that fire load. And then we go to the next area and the next area. So we never had serious forest fires. Where do we see serious forest fires all the time? Every single year. California.
Oh, yeah.
Because the state is controlled by environmental wackos. And I talked to a fire chief out there one time, and he says, we're constantly in fear that a forest fire is going to burn down our whole town because the government will not allow us to go out and do controlled burns and burn off that fire load. So when it comes, it's going to be a mother of a fire. And that's happened over and over again, and they still don't learn. So you're absolutely right. For a healthy market, doesn't matter what market it is, it's got to have pullbacks. It's got to have clean outs, and it's got to have consolidation. So we're going to see the same thing when it hits these other psychological barriers at 16, 17, and 18. And I'm not saying if, I'm saying when. Okay. The real test will be at 1900 because, as gold was going up towards 1900, an awful lot of people were, calling 2000.
Mm-hmm.
They had no problem thinking about 2000. Today, after all the pain we've experienced, nobody's talking about 2000. So I think 1900 will be a real test, but eventually it will break through. And when it does, then truly the sky's the limit. So we need to act now. I didn't know this before, but I just came across this quote. Thought it was very interesting. British naval historian named Northcote Parkinson. How would you like to?
What a name, That's
yeah.
It's got a real regal kind of a sound to it.
Northcote. I'd feel special if I had a name like that.
Mm-hmm.
Anyway, he said it best. Delay is the deadliest form of denial. Okay. People are in denial. Well, they don't believe that the stock market's going to crash.
Okay.
They just can't feature it. So they know that eventually they're going to have to pull money out of the stock market and put it into gold. But they keep delaying it because they're in denial. And I'm hearing people saying, well, gold's going to hit 30,000 long before it hits 20,000. That's real denial. Okay. Not with the kind of national debt we have, not with the fact that world economies are weakening. Even our economy is weakening. We only talk about, like I say, the smiley face kind of things that are happening in the economy. But there's some underlying things that are going on that we don't have time to go into today, but I'm sure you and John probably talk about them, that, indicate a weakening of the economy. So eventually it happens, and then it'll come back. It always does. But
it always does. And I just covered that in depth earlier before you came on today. S&P 500 best of breed index, 500 large cap companies, but let one of them get sick, a little sickly, miss their numbers a couple times, they kick them to the curb, bring in a fresh, strong new bull. So it's always 500 of the best. And so over time, and I'll show you the chart when I take the charts back later, I was able to go all the way back to 1882, I think it was. And we've been in an uptrend since then.
Yeah.
Since they started keeping track. So, if you can if for some reason you can suddenly only trade one direction, you got to choose your direction and stick with it for life. It better be the long side.
You don't want to stand in front of a moving freight train, right?
Yeah. It's a race with two horses, a white horse and a brown horse. Now, sometimes the brown horse will pull out in front, but at the finish line, it's always the white horse who takes home the roses.
I used to hear people say a white horse and a black horse.
Okay.
But I think you have to be careful about
I'm
either
a nonconformist.
And you have to be careful about either because suddenly.
Oh, was that racist? Did I just make a racist comment? I'm sorry.
And you even used the word race. You used the word race in there.
Oh, no.
No, I was just thinking about Alexandria Ocasio-Cortez. You know what the new definition of MAGA is, right?
No.
Make Alexandria go away.
Man.
So
and she's got a ring in the nose of all of these, congressional leaders who've been, they've got 20 years in, 25, 30 years. And now all of a sudden they're following her around like she's the Pied Piper of nonsense.
They're scared to death of her, okay? But when Trump responded to her little squad's attacks on him,
oh my goodness,
yeah, she didn't talk about them as themselves as what they are, freshmen representatives who should keep their mouths shut and learn something before they start spouting off. I mean, her first day in office, she let us sit in Nancy Pelosi's office.
Right.
Way to win friends and influence people. Yeah. But anyway, she referred to the squad as women of color. Well, I look at her, and I don't know, you know, she's got a Spanish last name, but she didn't look any different color-wise than I do, okay?
Yeah.
My wife was born in Cuba. I've never heard her refer to herself as a woman of color, you know? I mean, they try to make everything about race. So just be careful using the words brown and black. Maybe you might use green instead, you know, just for safety.
Sure.
Oh, no, then you might offend a Martian.
That's true.
Got to be careful.
That would be wrong.
Gotta be careful.
I mean, just so much of the insanity. People who break the law enter our country illegally. We're gonna pay for their health care. When there are sick American citizens who've worked hard all their life, paid their taxes, did all the right things, and now they're sick, and they don't have coverage. They don't have coverage.
They can't get health care, and here the illegal immigrants and prisoners get better health care than a lot of Americans. I mean, if some pervert that's in prison decides he's a woman, some states are paying millions of dollars for his sex change operations and hormones.
Yes.
Okay.
Yes.
Because then he can go over to a women's prison. He may not even think he's a pervert. He may just be doing it as a ploy. But the women's prisons are a lot nicer than the men's prisons. I mean, it's just we're living in wacko world.
I'm sorry. Have you heard about the drag queen story hour?
Yes.
You have.
Yes.
Taking place in publicly funded libraries across America. Not and if it weren't enough that they're having the story hour, they're also starting to have these contests or pageants. I guess like this RuPaul Drag Race, that TV show. They got little boys coming in, and at the end of story hour, they all get dressed up, and then they parade around, and then, you know, they vote on who's the prettiest, I don't know, sexiest. My God, they're 7, you know. This is an outrage. Now, what people do behind closed doors is their business, none of mine, and I'm not sitting in the judgment seat against someone's choice regarding their gender, their sexual orientation. You know, I just, it's not my business. But when you bring it into a taxpayer-funded public library and start sowing these seeds in the minds of these impressionable children, that just concerns me, because it's not even the problem. It's a symptom of a much greater problem that we have in this country right now.
Well, and it's not just the fact that it's taxpayer funded. It's the fact that this tiny, tiny minority, you know, less than 1% on anonymous polls.
Right.
People could just say with your no repercussions. Less than 1% of the people in this country are in one of these various different perversions of the LGBTQ, all the world, you know. I think they got about 30 of them now. And yet they have this attitude that we can force our way of life on you, and you must accept us. Here in Palm Beach County, sure, it's a Democrat county, but it was close, so there has to be some sensible people here. The school board has allowed a book called King and King to be read to kindergartners and first graders. And it's a picture book, it's got these nice pictures. It's about this little prince, and he can't become king until he gets married. So they parade all the little princesses in the kingdom before him, and he didn't like any of them. And so then he starts looking at the little boy princess, and he likes this one. So they get married, and the last page of the book is on their wedding day with the bells ringing and all the people cheering. These two little boys are kissing each other on the lips. All right. And they're forcing this down the throats of all the children in that classroom. And if the parents knew what's going on, they'd probably burn the school down, Hopefully when no one's in it, but you know the point.
Yeah, no. Yeah. My kids know right and wrong, and they know right and left. And they have.
There's a reason why they call the right.
Yeah, and they clearly understand that when a teacher crosses the line, that they very respectfully stand up and request permission to leave the room and stand in the hallway until this nonsense is over. And I've taught them how to do it in a very polite and respectful manner. And I think my daughter hasn't had to play the card. I think my son's only had to play it once, maybe twice. And from that point forward, in that class, his grades dropped like a rock.
Yep. Yeah,
and
look,
this is a true story. I'm not making it up.
The school teachers have bought in 100% into the Democratic Party platform, which includes homosexual marriage and abortion on demand. Now, it's a political party, right? I mean, you would think their platform would have something to do with politics, but the first two things in their platform are homosexual marriage, abortion on demand, and the National Teachers Union, the NEA. They call it the National Education Association, but it's a union. And that's the first two things in their goals. They want to teach children to normalize, to say that homosexuality is just as valid as heterosexuality, and so on. Now, I'm a little different than you, when you say, well, I don't care what happens to people's homes. I know that's the politically correct thing to say, but I'm not politically correct. And I just
believe that my backside is too narrow to fill the seat of judgment.
I'm not talking about judging them. I'm talking about just saying what the Bible says.
Well, yeah,
I fully expect to be arrested one day when I'm preaching in a church for saying that homosexuality is sin. Okay, because they're trying to make that.
So is gluttony. So is drunkenness. I mean, in that scripture, it's not just homosexual that's referred to. And again, we have a big.
But nobody's
going to
throw you in jail for a hate crime for saying somebody's.
I don't know everybody's personal life in my audience, and I'm not here to offend anyone. I'm really not. But, well, everybody knows where I stand. I'm just leave it at that. I don't need to beat it up. Go ahead, Doctor.
Yeah. No, I'm not trying to offend anybody. I'm just saying that they're being so activist about it, to where homosexuals are going into churches and screaming obscenities and breaking up services because that church teaches what the Bible says. So nobody complains that the Bible
don't go to that church. I mean, how hard is that?
Yeah.
You don't like
nobody objects if somebody says that gluttony is a sin, which it does, or that a lot of other things are sin. Nobody objects about that, but they're trying to make it a hate crime to say for someone just to quote the Bible, and that's just going way too far for me. I'm sorry.
It is. Yeah. No.
Anyway, CFRNgold.com.
That's a beautiful place. I love that CFRN Gold.
Man.
You're going to get a starter
like I said-
pack, folks. You're going to learn. You're going to be on the same page with us every Thursday when Dr. Tom visits us and talks about investment grade gold. You've always heard that it should be, some portion of your portfolio. Now, I haven't had a chance to run this down and vet it, but John, who has a near photographic memory, said he read the other day Morgan Stanley had said in an interview or an article something that they now believe gold should be 50% of your portfolio. I said, John, are you sure? That really seems kind of out there for Morgan Stanley to. He goes, well, Dwayne, that's what I read. Now, just because you read something on the internet doesn't mean it's true. Have you heard that?
Excuse me.
Have you
I
heard
have
something
not,
along those lines?
but I have heard some respected financial planners and analysts say that you should have at least 50%. 40 years ago, when I enrolled in the College of Financial Planning, it was 10%. Okay.
Mm-hmm.
But the danger has gotten progressively greater because, I always talk about the fact that the dollar's lost 96% since we went off the gold standard. Well, most of that loss has happened in the last 30 years. So the momentum is accelerating to the downward side. So inflation gets greater every year. And so a lot of people are recommending 50%. By the way, one thing I didn't mention here, because we were just talking about gold bullion today.
Mm-hmm.
I just wanted you to have a picture of where gold bullion's going. Keep in mind that investment grade gold has historically returned 8 times more than gold bullion, number one. And that when bullion goes up, investment grade gold goes up more. When gold goes down, investment grade gold either goes up less or it's flat. And the only time investment grade gold goes down is if gold bullion drops, just totally falls out of bed. And even that is not the high quality. The less rare investment grade gold that's not in great condition can lose money from time to time. Not near as much as bullion, but it's possible. But the high grade investment grade coins haven't had a down year in 100 years. Name one asset class that can say that, honestly.
No, I
There isn't.
don't believe there is one.
And it probably goes back much farther than that, because the first formal rare coin markets started in England in the 1600s. Before that, there weren't any rare coin markets because the coins were just money. They didn't think of them that way. And then people started figuring out that, hey, there's only like 10 of these coins in existence. That's like having a painting from one of the masters, And so that's when the formal rare coin market started. But it's hard to get data. But we know that going back 100 years, every other asset class has had anywhere from 50 down to the least is about 10 down years. Bullion has been down 10 of the last 100 years. So even though it goes up most of the time, it does sometimes go down. But investment grade gold, the high grade investment grade gold, hasn't had one down year. And by the way, I should mention this, a little extra incentive to go to CFRN Gold. We have some coins. I won't go into a big deal about them, but they are rare coins, or what we call near bullion coins.
Mm-hmm.
Most of the value is the gold, but they are slightly rare. And we've had some on hold since gold was at $1,300. We committed to making a big purchase of these coins. And so we're right now in the process. It takes time to get all this stuff done. So we've got coins that we bought way below the market. And these are a really, really good deal. So if anybody's interested, you'll get an email back with the Gold Education Starter Package in it. Just reply to that and say, I'd like to look into some of this gold that's under the market.
Oh, and so when they go to CFRNgold.com, request a starter pack, they're going to get that information as well.
They would need to request that particular information because that's a standard email that goes out. If they specifically want to get in on some of this, I don't know how many coins we got, probably only about 100, but they're way below market. Then they should just reply to the email.
Is there an average price there you could throw out?
Not really, because they're different grades and qualities.
Okay. All right.
But I would say, people are going to save $100 to $200 per coin on average. Okay.
All right. Very good. All right, let me take these charts back. And I'm going to pull up real quick before you go. Is that the right chart? It's the right screen. Okay. Guys, remember what I was telling you earlier about zones being an area? Okay. And I'll fix this one up here in a moment. I just wanted to bring this up. I brought it up earlier in the show. Do I still have it up? Well, here we go. SPX. Monthly. And I can scrunch all the way back. What happened? All right. Now this is recorded. It went back to 1882 earlier in the show. Tell me I'm not crazy, folks. I'm in the audience. You were here. You saw it. I don't know why it's not doing it now. Maybe that was a glitch. I don't know.
Well, it could have been a off-market trade, and sometimes they print and then they realize, oh, I wasn't supposed to print that because that was a private thing, and they'll pull it back off. I've seen that happen.
Okay. Yeah, because it went. Has Standard & Poor's... Well, see, I was questioning myself when I saw that because I had never looked at it at the S&P cash. I hadn't... Was Standard & Poor's around in the late 1800s?
No.
Yeah. Okay. All right. All right, we'll even get 1971.
The Dow Jones is the oldest average that's been continuously published.
I mean, this definitely, even though this only goes back to 1971, I think everyone can see it starts in the lower left-hand corner and ends in the upper right-hand corner. That's the definition of an uptrend. Are there pullbacks? Are there retracements? Does the market take a rest? Yes. Now, each one of these candles represents a month, and an awful lot happens inside of a monthly candle. But from this perspective here, this was 2009, right here. I think we all remember that. And look what we've done in the last decade, 10 years, that we didn't do in the previous almost 40 years. Is that right? Yeah, I think so. Interesting. Very, very interesting.
By the way, I thought I knew this, but I just checked it. The S&P 500 in its present form, because they did change it pretty radically, started a year before I was born, 1947.
Okay. Huh. Well, all right. Hey, that conversation you and I were having the other day?
Yes.
Have you thought about that anymore? I have.
We had
I'd like to continue that conversation here, maybe later today or maybe tomorrow. So
tomorrow would be better because I have to actually tape my regular radio program, and I've got to do that this afternoon.
Okay. So what am I, irregular?
This is the easy one. I'm the guest. Okay.
Right.
I just I don't have to do all the doing. All I have to do is talk. On this one, I do a regular radio program on a Christian radio station, and I have to produce it, edit it, do all that stuff.
You get to turn the knobs and slide the sliders and all that, or do you have an engineer?
I have an engineer, young guy, a college guy. He does most of that for me. but I still have to put it all together and,
Gotcha.
you know, tape it and so on. So there's a little technical stuff on my part.
Oh, hey, I don't
So anyway.
know. Yeah, well, I'm sure we talked about it last Thursday, and I know you got to run, but you know, we had our 1-year anniversary of Logic 247, our weekly trading zones, which you see, you know, on my chart all the time. And let me just fix this so nobody gets confused by it.
Happy anniversary.
Yeah, thank you, sir. So 5758. So we're approaching our 10-year anniversary for the weekly trading zones. We just had our 1-year anniversary of our Logic 247, and not boasting. Well, I am. I'm boasting about the goodness of God, and I think that's okay. Last week, the 1-year anniversary. This is how we finished up the week. We had 58 total alerts issued around the clock. 5 of them never triggered. That left 53 actionable. 35 reached the final target. 8 reached at least the first target. And 10 were stopped out. So 19% of alerts were stopped out. And by His grace, that's what we've enjoyed. It's right at it. Over the past 12 months, the first year, we averaged on a weekly basis 20% of the alerts do get stopped out. That's the truth about trading. And anyone that tells you they know of a way that you can not get stopped out or that you shouldn't use stops, well, you better give that person a second look from a distance. I'm just saying. So, yeah, I just want to share that with you. And then this week, week 53, so beginning our second year, thumbs up means price found its target. An X means it got stopped out. But we've had a very busy week. Now, we start Sunday night at 6 p.m. Eastern. So right here, 6:18 Eastern is when this went out. That's showing my time Pacific. And all of this was Sunday night. You know, most people think the markets don't open until Monday morning, 9:30. But we had all of these Sunday night, a couple stop outs, and then, you know, here comes Monday. So it's been a busy week, lots of alerts. The markets have been so kind, they've been so active, and man, it's a great time to be a trader. It really is.
Well, I definitely, you know, like I told you, I am interested in starting to trade your system, so please do call me tomorrow. Let me ask you this. Do you ever use trailing stops?
We do. Or I teach people how to, if that's what they want to do. Here's the thing. I'm still scrolling through this week. Okay, now we're up to today. All right. Yeah, I think I got a chart right here where I can show this clearly. Okay. Important prices, important areas are almost always tested. Now, that's one of our market truths, because my numbers, my alerts, I derive them in probably a somewhat unique way. And so when we have an alert trigger, like right here, this was B long, 2865, weekly trading zone overhead at 2880, so that's a 15-point move in the S&P. We fully expect price to get turned away because when you approach a zone from below, you expect it to be good resistance until it isn't. So just a beautiful move, 2865 to 2880, and 15 points. Then we get back below the trigger. A second time, we run up to 74. So that's from 65 to 74. That's a 9-point move. And then we get back below the trigger. And then we make that 15-point S&P run again. And that's $750 per contract. We then get back below the trigger and we trigger again. So off of just one alert, 1, 2. That one could have stopped you out right there. That's actually number 3. There's number 4. And now we've done another zone-to-zone move. So when it comes to stops, I teach everyone how to look at the structure of the market. You know, lots of folks teach you just some fixed amount, be it points or a dollar amount. And that's okay. I mean, it's certainly better than having no stop at all. But we want to look at the structure of the market. And once I teach a trader how to see this, you can't unsee it, and it just becomes second nature. So if you prematurely move your stop to break even, since we know important prices and important areas are almost always tested, this is not unusual to see 1, 2, 3, 4 triggers. That happens day after day. In fact, more of our alerts trigger multiple times than don't. So, but I'll talk to you about that. It's, again, what we do is a little bit unique, and I've always been the odd man
Well,
out.
also, most of my trading has been stocks and options.
Yeah.
So the price movement obviously could be different, but the reason I love trailing stops is because once I've locked in a profit, and I don't have to do it, it does it for me. It pulls that stop up. I'm now in a riskless trade, unless there's some huge slippage. And I just see too many people make a really nice profit. They're up 50, 60%. And they're not paying attention. They still left their stop down at whatever it was below their buy price. So it gets all the way down to the buy price. They're sold out, and they've lost all those nice profits. So that's disheartening. So
and like here
that's
on this
a trailing stop.
On this move, if you were trailing tightly, you'd be okay. But if this thing ran up, you didn't take profit, but because you were taught at some point you need to get your stop to break even so you have no risk on the trade. Fail to take profit here, move your stop to break even, and it's all gone. Because more times than not, price is going to come back to that trigger, and it's going to offer you a second, a third, a fourth opportunity. When you understand that and start looking for it and watching it, people go, I always wonder why I got stopped out all the time. I was doing what they told me to do. How come I never saw this before? Well,
but with any kind of stop, there's a risk,
sure,
and that is that you're going to get stopped and then it's going to go back up. But the risk of not having stops is greater. I did a whole video on, it's called Stop the Insanity of Trading Without Stops.
Right.
And I talk about all the different kind of stops there are. And, you know, trailing stops are not appropriate for every kind of situation. And the size of your stop definitely has to be a lot different, say, if you're trading stock options as opposed to trading stocks, because the options are a lot more volatile. So there's a lot more to it than just saying, yeah, you use stops. Like you say, it has to be in relation to the market you're in and the current market action. But I'm glad that you encourage people to use stops.
Oh, it's if you don't have a hard stop, you don't have a trade. You're gambling. That's all you're doing.
Well, here's one. I'll give you this one, and you could use it for free. Okay. Trading without stops is like driving a car without brakes.
Well said.
Danger, danger. Okay, I got to run.
All right, my friend.
God bless
Have a great
everyone.
one, Dr. Tom. Thanks so much. Okay, folks, back to where we left off. Now I know it's getting late. I got a meeting coming up here pretty quick. But well, I just said all of that to him, and you heard it, so I don't have to say it again. Let me do this. All right. Concierge Trade Alerts. If you did not grab a screenshot when I put them up earlier, and you would like to, you have 5 seconds. 5, 4, 3, 2, 1. Okay. Last night's Concierge Trade Alert, they went out at 9 p.m. Eastern last night on the nose. Consider being long at or above 28.95. Okay. I think I already marked this one up. Did I? Yeah. Okay. All right. 28.95. And the swing high so far, 29.33. So 29.33. 29.33 minus 28.95. That's 38. 38 S&P points at $50 per point. That's $1,900 per contract. That's what the market made available. Now, I already noted on the screen, from this zone to the zone overhead, 54 points at $50 a point, $2,700 per contract traded. Now, it's very difficult to get out at a swing high or swing low because you don't know it is such until after the fact. On this trigger right here, okay, I was talking about the exit signal earlier. Here's another example. Price makes this beautiful move, and then as it approaches this zone overhead, which we expect to be good resistance. Remember, these numbers went out to all partners and passport holders Monday morning at 6:15 a.m. Eastern. Well, once we publish them on Monday morning, we don't change them, massage them, manipulate them. They're carved in stone for the entire week. Price has done exactly what you're seeing it do right here. Oh, since time began, I guess, but we can document that it's done this going back to December 14th of 2009, which is when we first publicly published the zones for others. Now, price is always trying to get to a zone. I can't stress that enough. Price is always, the market's on a mission. It's trying to do something all the time. You've got a zone overhead and a zone below all the time. Price is always trying to get to a zone. So once you understand, once you can see which zone price is trying to get to, even if it doesn't make it all the way there, there's an opportunity to often take a healthy profit. Okay. Now, when price rose up to this zone right here, what do we expect? We expect it to be good resistance until it isn't. Only three things can happen at a weekly trading zone. When price encounters a weekly trading zone, the most likely thing to happen is consolidation. That's this. That's the most likely thing to happen. Second most likely thing is rejection. And we've got rejection right here. I liken it to somebody reaching over and touching a stove, only to find out it's a hot stove. They snatch their hand back. Okay? So the wick touches it, and then it runs the other direction. Consolidation, rejection, and the third and only other thing, doesn't happen a lot, but it does. That's called the slice, and that's when price just slices through the zone like it's not even there. I don't have one on the screen at the moment, but, and I don't want to take up the time to go chase one down, but this is what it would look like. Okay, let's say price was moving up here, and instead of doing what it did there, it just cruised right through that zone like it's not there. So then what? Well, typically here's what will happen. When that initial move, when that candle is done, and it, you know, you might get a second or third candle, but really just watch the 30-minute chart, and you'll see this play out over and over. It slices through the zone like it's not there. Then price pulls back to the zone, confirms good support. Remember, coming up, resistance, pulling back to it, support. Slice through, pull back to the zone, and then continue in the direction of the slice. All right, so three things. Over here, price rose, hit the zone, good resistance, most likely thing to happen, consolidation. Then we start to move higher, okay? And then we pull back to the BBC. BBC stands for Bull Bear Cross. And all it means is this. When price is above the green line, we anticipate higher prices. When price is below, we anticipate lower prices. I highlighted yesterday how, based on what I just said and nothing else, a person might get short on this candle or this candle, and when price gets back above the BBC, instead of giving you the lower prices that you anticipate, once price closes back on the other side of that BBC, well, that you got to get out, because you're on the wrong side of the trade. You're on the wrong side of the street. Once price got back above, we anticipate higher prices. When it gets to the zone, we expect that to be good resistance. We expect it to consolidate like it did. And now we're waiting for the market to tell us which zone it's going to try to get to next. Okay? So when price gets below the BBC, we anticipate lower prices. Okay? Now, do we have a zone down there? Where's our zone? 28, 11/12. Where's the chart? I just put the zones on here. Did I put them over here? Okay, we'll just use this one. All right, so why do we stop here? Price is always trying to get to a zone. Why do we stop here? It says potential support. Okay, now when you look at that, you just see a big green candle. It's very bullish. Why in a falling market would that arbitrary area be good support? Why would I think it's going to be good support? If I put the indicators on, then you can see. The price at which a bullish or bearish cross actually happens, okay, becomes an important price, important area in and of itself. So, like 2 days ago, I put the arrow and I said, you know, this could be good support. And then, of course, price did what we thought it would do. The next high probability thing came down, found that support, right, and turned back up. Leg, retrace, leg. And that alert from, I guess, yesterday, it triggered here, and then it triggered again here. Each time we're expecting the zone overhead to be good resistance until it isn't. So let me try to just simplify this. When you get above a zone and you get above the BBC, your eyes should be on the zone overhead, because that's where the market is currently trying to get to. When price gets below, it's trying to get to the zone below, but sometimes obstacles will be in its path. There it is. Now, that's a 30-minute chart. Be cool if that worked on a daily chart, right? Now, I know we spiked it, right? Because, here, let me do this. By the way, those are reverse fibs. And I put some commentary and some charts in the Telegram channel last night explaining this, but it's important. So, the price of the bullish cross, price came down initially, missed it by just a little. There's a lot of downward momentum that day, all right? So, as you can see, that's kind of just right in the middle there of where we made the turn. Price starts to rise. So last night in the Telegram channel, I said we were building this candle. We were still down here. I said that red and falling CFMA1 overhead on the daily chart could be good resistance. It also, you see that it's at a 50% reverse fib. Now, a reverse fib is simply drawing your fibs from the high, most recent swing high, to the most recent swing low. Doing it the traditional way, from the low to the high. Okay? So, just so happens that that bullish cross, that important price, important area, from the swing low to the swing high, which, by the way, hadn't happened yet, represented a 62% Fibonacci retracement. You don't have to worry so much about learning fibs. I mean, I'm going to teach you fibs, and I'll teach you as much as you want to know about fibs. But fibs are already baked into our indicator cake. So I won't launch into a whole long explanation on that, but that's the deal. All right, so from the swing low to the swing high, we pulled back to the 62% fib. We spiked it, all right? Now, if we do reverse fibs, this rally has taken us up through the 50, through the red and falling, CFMA1. Where do you think it might be headed? You can go to the head of the class, yes. The 62% reverse fib, and I say we spike it a tad, hit the BBC, and then we start to look for our next leg to the downside. Okay? Could something different happen? Of course. It's not possible to know what's going to happen next with certainty. However, it is possible to know what the next high probability thing is. And so from here, the next high probability thing is for price to go up and touch that BBC. Let me scrunch this chart a tad. Okay. Swing high back in May. Swing high June 21st. Resistance. Resistance. And we're looking for it to be resistance once again. Okay. Could something different happen? It could. But through the lens that we see the market through, based on our methodology, the next high probability thing for us, touch the BBC, or get very, very close, or spike it a little, because it's an area, and then another leg to the downside. All right, so what price is that? Well, that price currently, the BBC is at 29.50. Okay, let's go back to the 30-minute. Oh, we can effectively call that hitting the zone. Swing high was, and it looks like we're going to here in just a minute. Swing high is 29.33 and a quarter, and the zone is, oh, I need to put that zone on this chart. Oh, that's right. 29. I was in the process. 29.35. 29.35. Slash 36. Okay. Price, once we hit this zone, consolidated, if you didn't have the indicators on, you might say, well, it's now trying to get to the zone below. But because you do have access to the indicators as a passport holder, as a CFRN partner, you know that you can't say price is trying to get to the zone below while price is still above the BBC. Price always reverts to the mean, and in our case the mean is the BBC. So we pull back. The BBC holds more often than it doesn't hold. Okay. So when it pulls back, what do we anticipate? Well, we anticipate that it's going to hold. And as long as price is above the BBC, we anticipate higher prices. Okay. So we had a leg and a retracement. We had a leg and a retracement. And this was kind of cute because we found the support at the BBC. But see that wick? It's almost like an obsessive compulsive thing. It's had to kind of reach down, just touch it. Just ding it, and say, hasta la vista, baby. And then we continue the journey up. Okay. This move right here. The concierge alert was considered being long, 28.95. 28.95. And we've already covered this, but I was doing it on the other chart, so I'll just show it to you here. 28.95. When price passes through that CTA alert, all things point to price going to the zone overhead. Look at the step line. On the left side of the climbing blue CFMA1. When price starts to run out of steam, what does it do? It starts to walk sideways. Okay. Now, this is a long trade. The step line has crossed over. So what we're looking for is the first red candle that closes below the step line after it crossed. And as you can see, there's a little bit of red. The closing price of that candle was $29.27. That is the exit signal for that move. Closing price $29.27. Oh, 29.27. Okay. Now, if there's anyone here that doesn't understand the exit signal, please put something in the chat box. I'll do my best to explain it. I think it's pretty clear. But don't feel bad if you have a question. Please, learning how to trade is not a spectator sport. It requires your participation. And if you're going to learn how to trade, you're going to have to ask some questions. Now, I'm not speaking to anyone in particular, just speaking. Guys, I just got a message. I gotta go here in just a minute. I have a really important meeting, and so I don't know what else to tell you, but I gotta go. I had so much I wanted to cover today. I don't know what my schedule looks like tomorrow for mentoring sessions in the afternoon. Maybe we can do an extended show tomorrow. So much has happened this week. And I just really want to make sure that you understand it. Because some of you are here on trial. You're passing through. If you don't grasp what we do and how we do it this week, while you're here, I fear that you're going to spend another, I don't know how long, I don't know how much time and treasure you'll spend looking for something that, quote unquote, works. We're not perfect. I know that. We get stopped out. We have good days, bad days. But here's the deal. I can teach you, if you're willing to learn, if you can put aside preconceived notions and other stuff, I can teach you to see the market the way we see it. I can teach you to think about the market the way we think about it. I can teach you how to develop your own narrative. As you hear me go through my narrative of what's happening in the different markets each and every day, I can teach you that, okay? Now, if I can teach you that and you learn that, what else is there? I mean, what else is there? My concern, honestly, I know this is going to sound cheesy and phony, but I don't care. My concern's for you, whoever you are right now. There's a lot of people in trial, but you, yeah, you. If you let this opportunity pass you by, we'll still be here by the grace of God. But when you come back, you're going to have financial woes to tell me about, how they took your money and then you blew up your account. Because it happens. I know, because it happened to me over and over, right? So you're going to come back, you're going to have financial woes, and you're going to have psychological scars. Now, the financial woe, God bless America, you can go get a job, make some money, and replace whatever money you lost. But those psychological scars, they run deep. Sometimes they're hard to correct. They are correctable. We can do it if we work together. But it just creates more work. So, all I want is whatever's in your mind, whatever it is that you've seen that just doesn't jive. I mean, I'm telling you that we have a simple method for trading the markets. We don't pretend to know the future and what's going to happen next, but we do have a method whereby we know with certainty what the next high probability move is. Now see, there's a world of difference between knowing what will happen and knowing what the high probability thing to happen is. So if anything you've seen or said this week doesn't measure up when you put it on the scales, if something's not right, I mean, you owe it to yourself. Book a mentoring session. Just get a hold of me on the phone and go, hey, you're dancing around like that's the greatest thing since sliced bread. But I don't think it is because, and then whatever, right? If that's you, if you resemble that remark, it's because something you've seen or we've said you don't understand. I'm not being hard on you. Maybe I didn't explain it well. I'll take the blame. The thought of you, because if you don't sign up, and yes, you are one of my multiple income streams. But if you choose not to sign up, somebody else will come along and they'll take that spot, right? Again, I know it sounds cheesy and phony, but my concern is for you. I know what it's like out there. We built this place to protect aspiring traders from what's out there, the wolves of Wall Street. I'm not saying everybody's a bad guy. No, there's a lot of good people out there. And there's many ways to trade the market. I'm certainly not saying that our way is the only way, my way or the highway, not at all. But if you don't get a good education here, just please get one somewhere. If you're tuned into the Christian Financial Radio Network, I suspect that you have some very noble plans for profits you take out of the market. I support that. We want to help you achieve that. But until you invoke dialogue and start asking questions and just kind of getting to the bottom of this whole thing, I'm limited in how much I can help you. So that's it. I got to go. I love you. Thanks so much for tuning in. If you're a partner or passport holder, I'll see you in the Thursday night workshop tonight. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And yes, I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.